Attention UAE businesses. The FTA has introduced a reverse charge mechanism on metal scrap, a key update that shifts VAT responsibilities. Here's what you need to know. This applies to metal scrap with commercial value, including ferrous and non-ferrous metals that can be reused, recycled, or processed for manufacturing. Under RCM, supplier does not charge VAT and does not report VAT for the sale. Buyer must account for VAT on the purchase and fulfill all VAT obligations. This shifts the tax liability from the seller to the buyer. RCM applies only if the buyer is VAT registered and provides a written declaration confirming their VAT registration. That the scrap will be used for resale or processing. Suppliers must verify this and issue an invoice stating that RCM applies. RCM does not apply if the transaction is zero-rated. The buyer fails to provide the declaration. In these cases, normal VAT rules apply. Businesses should update invoicing systems, train finance teams, collect proper documentation. This reduces VAT risks, simplifies compliance, and enhances transparency. The UAE's reverse charge mechanism on metal scrap is effective 60 days after publication in the official gazette. Stay compliant and prepare now. Follow FintEdu for more insights on UAE tax and compliance.